Now we're counting down to the third plenary session of the 18th CPC Central Committee that's starting this coming weekend. A key part of those meetings will be plans for financial reforms. Now while optimism from investors has pushed up related stock prices to feverish highs, Cheng Lei shows us why the hype shouldn't be part of those expectations.
Expecting big surprises from the financial reform plans? You might be let down. Wang Yiping, professor at Peking University's China Center for Economic Research, which is tasked with research to back up the reform plans, says by their nature, the plans won't be radical.
It will have to be reassessed by so many officials during the process, and everybody has his or her own viewpoint, and these are all reflected in the final product. So I think the final product will be a relatively well-rounded document.
Of the tough nuts left to crack, it's interest rates that may move first.
Savings rate normalization, mainly the interest rate deregulation, we should expect something to happen probably within the next 12 months.
In contrast, opening up on the capital account, which means Chinese people will be able to invest overseas freely, may need to come later.
I think the hardest or the most dangerous ones would be the opening up the capital market, capital accounts, and to make the exchange rate to be flexible. And those, I think they are harder to do, because in order to get there, your financial institutions need to be competitive.
But reform is already in the air, and the entrepreneurs who are among Chen's students at the business school are feeling it.
I think in the first half of the year, it was much more pessimistic, a lot of rumors. But up to now, I think it is changing much more positive and related, because there were a lot of reforms taking place, including the Shanghai Free Trade Zone.
Here on Beijing's Financial Street, it takes me just minutes to walk from the securities regulators to the banking regulators. But these top regulatory bodies have very different functions and interests. That's why pushing for coordinated reform can be quite a challenge.
Well, China government is a very big administration, so I do see the different functions when they make these reform steps. They may not have calculated every step very carefully, especially calculating the other administration's steps very carefully. So these sort of bumps do happen.
What Jerry is most upbeat about is the de-risking that's going on in the financial system, and believes it will eventually translate into higher stocks.
So I think the market will gradually adapt to this new form of deleveraging, de-risking. And I think this will give us a path to sustainability. And I think at one point, I don't know what exactly the timing will be, maybe in late 2014, maybe in 2015, we will have a bull market.
The financial reforms package from the third plenum meetings may not shock and awe, but those who are bullish on China's reforms recognize they're not an end in itself, but a 35-year process that's going to go much further in the next decade. Cheng Lei, CCTV News.